Hello and welcome to an FXTimes daily market recap. I'm your fundamental market analyst, Nick Nassad. Today is Monday, February 8th, 2010. We begin this week with rather tame market conditions following our volatile conditions we had in the later half of last week. Here we're looking at the euro dollar, and we see that the euro managed a short rally in today's trading as there was no further bad news about the Greek debt situation and Greek credit default swaps. The spread there actually fell. We did see some higher equities in Europe, and so that helped to boost the euro in today's trading. We hit a low just below 1.36 on Friday's session, and we reached as high as 1.3710 in today's trading. However, as you can see, all of our trading range for today's action remained within the range we saw on Friday. So while the euro and other risk positive currencies enjoyed perhaps a brief respite from the recent pounding they've been taking, those riskier assets are likely to come under pressure again as sovereign debt issues weigh on markets. Though Greece has presented a plan to try to cut its budget deficits, there are some concerns as unions in Greece have threatened to protest those budget cutting plans, and in other countries such as Portugal, we had a vote on Friday where it extended spending powers of regional governments, so that also weighed on concerns about how the Eurozone is going to be able to get budget cuts from some of its stressed member states. We had a similar story against the yen as the euro rallied slightly but stayed within its trading range from Friday's session. So that's a period that usually means a period of consolidation before perhaps a continuation of the trend we had seen, especially on Thursday's downswing. We saw a similar story with the pound dollar as the pound managed to rally, hitting resistance at 1.5660. The pair did slide to a new low, lower than we had seen on Friday, just below the 1.5550 level, but we did rally in New York trading. Traders and investors are nervous about the UK pound as it faces some of similar situations in that it has a large budget deficit and we have the possibility of political gridlock if upcoming elections result in a hung parliament. So, and that is being suggested by some polls. A hung parliament means that one party doesn't have a clear majority, and it could mean that the slim budgets that would be necessary in order to cut into the UK deficits will have a hard time getting passed in the parliament. We saw a very sharp slide in favor of the greenback and against the pound in the last 3 sessions of last week, and this follows a break below 1.61 2 weeks ago. So we'll see if there's going to be a bit of a counter rally to these declines, or if we extend this down move throughout the week. The dollar Swiss franc pair fell from its high near 1.08 that it set on Friday, as safe haven flows favored the greenback in the later half of last week. In today's session, we tested the 1.0680 area as we had some risk appetite which helped to retrace these safe haven flows, but we also had some positive data come out of Switzerland in the form of better unemployment rate and higher than expected retail sales. In those reports, we saw that retail sales adjusted for inflation and shopping days rose by 4.7% in December from a year earlier after sales had declined 0.1% in November. Also, the seasonally adjusted jobless rate slipped to 4.1% for the month of January from 4.2% in December. Expectations had the unemployment rate increasing. So this is an indication that the Swiss recovery is gaining traction. We did see manufacturing growth accelerate in January, and consumer confidence has risen to its highest in almost 2 years. However, something to look out for is how Swiss exports hold up as global stimulus packages run out. Also to keep in mind would be what happens to the euro-Swiss franc pair, which I'm pulling up here. And if the euro keeps declining as a result of its sovereign debt issues, and the Swiss franc strengthens on the back of better fundamentals, this would favor the Swiss franc in the euro franc pair. And we saw on Friday what happened once we fell below the 1.46 level, which we had the Swiss National Bank intervening in the currency markets, but it seems that we're back at a similar level to before we kind of fell below the support here around 1.4640. So we'll see how traders and investors deal with the Swiss National Bank not wanting the Swiss franc to appreciate. Now let's shift our focus to upcoming fundamental events. Tonight at 7:10 p.m. the UK will post its BRC retail sales monitor as well as the RICS house price balance. At 7:30 Australia posts its National Australian Bank business confidence report. Overnight we get machinery tool orders data from Japan as well as German trade balance and final version of consumer prices. At 4:30 a.m. the UK will post its trade balance. The fundamental docket in the US is very light tomorrow with only one main release, which is wholesale inventories. So that'll do it for today's recap of the Forex markets. For more news, videos, and analysis, please visit our site FXTimes.com. I want to thank you for watching and wish you good trading.